Hey everyone. So today's stock is obviously Tesla. I mean, it was pretty active today. So I'm Mark. I am the stock market jobber. That's kind of my alter ego. And I'm a good person to be the stock market jobber because I have such great experience. I spent a couple of years as a hedge fund, well, as a market maker. I basically spent about 2 decades overseeing the trading of a lot of different hedge fund strategies. I've been in the real institutional world, and when I decided to quote unquote give back, I said, well, what could be better than teaching people how to make money for themselves so they can do good things for other people? So this is Tesla, and I want to talk about the concept of overbought and oversold, but let's move up to the next slide here. Most stocks spend most of their time trading within their average or typical or historical trading ranges. Makes sense, right? It's average or typical or historical. If something gets above it, it's called overbought. If something gets below it, it's called oversold. Now check this out. This is Tesla. I was surprised that this company's been around for 10 years. I thought it was pretty new. But this indicator down here, or this thing on the chart, is what we call a momentum indicator. It measures if something is overbought or oversold. Overbought means it's trading at a level that's above its typical or normal or historical trading range. Oversold is the opposite. So check this out. This is the most overbought it was ever in history. So perfect time to sell. Then a few days ago, we got the most oversold in history. It was a perfect time to buy. It's up like 5 or 10% since then. So remember, it doesn't need to be complicated. Just make it overbought or oversold. Look for a reversal. Just to make it a little bit more, I don't know what's the right word, but closer or in touch, because this is the 2.5 year chart, but see here, resistance became support. Now this happens because of seller's remorse. People sold, and when the shares went higher, a lot of those sellers regret doing so. So they vow to buy their shares back. But they're only going to do so if they can get them at the same price they sold them at. So they place their buy orders where they had their sell orders. If there's enough of these buy orders, the level that was resistance turns into support. And now this is a perfect example of market memory. Except I can't find where my damn pen is, and I should remember it by now. But anyway, regardless, let's see. Okay, so I got my pen. All right, now this is market memory. Certain levels are more important than others. Back in 2020, seems so long ago, the 110 level was important. Now we seem to have kind of broken it, but we're back above it. And, I mean, we talked about it today, this morning, and a lot of you I know made some money off of it. For a short-term trade, it's probably time to get out. Longer term, I have no idea where it's going. But the market showed some weakness today with the reversal. Okay, everybody, thank you so much. Once again, I'm Mark Putrino. Check out my website. It's the stockmarketjobber.com. This stuff here on YouTube is free, but, we're all capitalists, right? I want to make some money. You want to make some money. So we charge for the website. It's not a lot, in my opinion. I think it's should be way more, but the marketing team wants it lower. But whatever. That's an internal fight, everyone. I'll keep you abreast of that. Okay? All right. Thank you, everyone. I will talk to you soon.